Hey everyone, welcome to The Explainer. Today we've got something pretty incredible to unpack. We're looking at a highly formal diplomatic briefing, literally the kind of document designed for heads of state and central bank governors. So yeah, this isn't your average financial prospectus. It's actually a blueprint for a massive, alternative global financial system proposed by the Frank Ojogwa Ekejija Estate Trust and the NVC Fund Holding Trust. We're going to neutrally break down exactly what this proposed architecture is, how they claim it works, and, what it could mean for the whole global economy. Let's get into it.
Okay, let's dive right into this. Just listen to the mandate driving this whole thing: to operate in peace, without dishonor, by right of benefit. Honestly, it sounds almost cinematic, right? It sets this incredibly sovereign-grade tone right from page 1. It frames the entire architecture not just as some commercial banking venture, but really as a diplomatic and humanitarian mission meant to stabilize global finance.
But okay, to actually understand the solution here, we've got to look at the problem it claims to solve. The document describes what is essentially a global financial pressure cooker. We're talking severe liquidity shortages, crippling high interest rates, wild foreign exchange volatility, and of course, skyrocketing sovereign debt. This is the everyday reality squeezing nations worldwide right now, leaving them completely desperate for capital and, well, just some basic stability. So, to make sense of it all, we've broken this multi-trillion-dollar proposal down into 6 logical steps. We'll cover the global financial squeeze, a sovereign financial alternative, the 4 core engines, the digital reserve backbone, the sovereign promise, and wrap up with a new global invitation.
Starting off with Section 1, the global financial squeeze. The core issue outlined here is really severe. Nations desperately need capital to build out their infrastructure and stabilize their economies. But, and here's the kicker, traditional routes for getting that money usually come attached with some pretty heavy political conditions, debt traps, or even a loss of domestic control.
Which brings us to Section 2, a sovereign financial alternative. The document's proposed solution brings in the Frank Ojogwa Ekejija Estate Trust, operating through its commercial vehicle, the NVC Fund Holding Trust. Basically, they're stepping forward to offer an entirely parallel system.
And they are doing so with a frankly jaw-dropping figure backing them up: over $10 trillion. And the briefing explicitly states this is a verified net asset value. That astronomical number is absolutely crucial here, because it establishes the sheer scale of the estate. It positions them as the sovereign origin of this entire system, meaning they supposedly have the massive financial gravity required to underwrite global credit.
But look, the money is really only half the equation here. The other half is their philosophy. The text heavily emphasizes sovereign neutrality. The briefing positions this trust as a purely neutral global stabilizer. We're talking no political influence, no ownership of national assets, and absolutely zero interference in domestic policy. For global markets, this represents a financial lifeline completely devoid of the usual geopolitical strings attached.
Moving on to Section 3, the 4 core engines. So how does a $10 trillion neutral trust actually function in practice? Well, the document breaks down this vast, highly conceptual architecture into a set of synchronized operational mechanics.
And this brilliantly illustrates the whole thing at a glance, pulled straight from the source material. You can see 6 integrated pillars here. It starts up top left with the estate's sovereign authority, moves through the trust, the reserve systems, and funnels right down into the active liquidity and credit facilities. Let's actually zoom in and look closely at the active engines driving this massive machine.
The first active engine is the GSLF, or Global Sovereign Liquidity Facility. Think of this as the system's emergency relief valve. The briefing states it can provide up to $500 billion per cycle to qualifying sovereigns. Its entire purpose is to immediately stabilize central banks that are facing balance of payment stress or currency crises. It basically gives them a massive capital buffer, but without demanding any equity in return.
Now, while that first engine is for emergencies, the second one is really for building the future. The GDCW, the Global Development Credit Window, is their long-term growth driver. It's designed to provide wholesale funding over decades, and get this, sometimes at 0 or sub-market interest rates for least developed nations. The idea is that domestic commercial banks can then turn around and lend more money directly to the real economy. Things like farms, factories, and tech infrastructure.
Then we have the third engine, the Global Correspondent Banking Network. Because, let's be real, all that liquidity and credit is totally useless if it can't actually move anywhere. The NVC Fund claims to operate right across Tier 1 interbank rails like SWIFT and FedWire to provide real-time T0 settlement.
The goal here is to completely eliminate the friction, the delays, and those annoying costs usually associated with correspondent banking chains, allowing for instant cross-border payments.
All right, on to Section 4, the digital reserve backbone. We're now shifting our focus to the underlying technological asset that powers all these transactions, the NVCT Digital Reserve System.
Now, what's really interesting about this slide is the sheer technological ambition outlined here. The NVCT is their sovereign-grade digital reserve instrument. Check out these features. 30 trillion units pre-minted, maintaining a strict one-to-one parity with the US dollar, and fully compatible with Basel banking regulations. Crucially, the document claims absolute zero fractional exposure. That means every single token is backed one-to-one by verified sovereign assets. No smoke and mirrors.
To make sure this actually gets accepted globally, the architecture uses what they call a dual-layer reserve. It pairs this new NVCT digital asset with the International Monetary Fund's SDR. That's the special drawing rights basket. By aligning with recognized multilateral instruments while still keeping full independent asset backing, they're aiming to create a highly stable, central bank-eligible reserve asset, with what they describe as unprecedented redundancy.
Section 5. The Sovereign Promise. So with all these engines and digital backbones supposedly in place, what does this highly formal framework actually pledge to world leaders and to the estimated 2.4 billion people in the underserved economies it targets?
Well, the source text draws a very, very sharp contrast here. Traditional global finance is, as we know, often associated with heavy political conditions, the constant risk of debt traps, and frankly compromised sovereignty. The proposed unified architecture, in stark contrast, explicitly promises to be non-political, non-intrusive, and entirely free of equity dilution. It is presenting this grand vision of funding without all that historical friction.
And this high-level diplomacy translates to some very specific ground-level impacts. The stated core benefits to participating nations include strengthened domestic banking systems that can finally expand credit to small businesses and farmers. It also promises foreign exchange stability, much faster cross-border payments, and the ability to finance massive infrastructure projects without outside political interference dictating their national policy.
Finally, Section 6, a new global invitation. Say you're a nation reading this briefing and you want in. How do you actually go about engaging with this $10 trillion trust? Let's move on and see how this builds across the document's 5-stage protocol. Step 1 is formal treaty recognition and rigorous KYC, Know Your Customer protocols. Step 2 is executing a sovereign framework agreement. Then, Step 3 actually activates those emergency liquidity lines. Step 4 gets the long-term development credit facility set up. And finally, Step 5 fully enrolls the nation into that real-time settlement network. So it's a highly structured, step-by-step onboarding process for an entire country.
Which leaves us with a massive question to ponder. We've impartially explored the mechanics and the frankly staggering scale proposed in this briefing today. But just imagine the geopolitical impact for a second. If a fully backed, completely sovereign-neutral architecture actually successfully offered access to a $10 trillion reserve with no political conditions, how fundamentally would that reshape the future of global finance? It's definitely a fascinating proposal to think about. Thank you so much for joining me on this explainer. Keep learning, keep questioning, and I'll catch you next time.